All right, guys. Welcome, guys. Uh, Today I just have to putting you guys through mostly important the ICT trading. So you know, I know most of, especially if you go to the inner cycle trading, is kind of really difficult. Most especially the 2022 exercise. Most people find it difficult to understand, to comprehend the ICT, mostly the tutorial part. So I'll be helping most, especially if you know you're a beginner and intermediate and you kind of or finding it difficult to understand ICT. So I'll be explaining it basically to mostly beginners and intermediate. All right. So this is, for example, now this is how the charts looks like. This is 4 hours time frame, and this is gold USD. Um, on this chart here, uh, there's what we call, mostly in ICT, we have what we call the power of three. That is the power of three. We have number one, we have the manipulation of the market, and then the distribution. Now, first of all, let me explain the manipulation of the market. Like, all right, let me, if you take a look at this, take a look at these candlesticks here. Now, these candlesticks here, most traders may actually expect this market to fall at this zone here. Now, you see the zone here, this is where it makes the high of the moment, the high of the day. And then it has a pullback. So most traders or the market makers, they actually create a kind of, they create a buy stops order at the up top here, expecting traders to put their stop loss at the zone here. So they expect traders to put their stop loss at the top here. Now, so most of the buyers, or let me say most of the sellers, this is where their stop loss. This is where their stop loss is. So this is where their stop loss. This is where their stop loss is. Then the market makers comes in to sweep out all the liquidity that was gathering in the zone. Now, this is where the manipulation take place, because most traders expect that this is where the market should actually reverse. And then if you take a look at, we have the fair value gap here. We have a fair value gap order here. So definitely at this zone here, there's supposed to be a downtrend. But the market makers are manipulating this market here, not allowing this market to respond according to the traders' languages or according to the traders' analysis. Now, they form a, should I say, a buy stop order at this point, allowing traders to go in. Now, uh, this is, I'm still explaining manipulation. Now, most of these market makers, let me say the market itself, does not have money to move this market. So the market make use of my money and your money in order to move the market. Without your stop loss, without your stop loss being hit, this market can't go bearish for the day. So it is your stop loss and my stop loss and every other people's stop loss shift all together into the market in order to go bearish. So now this is where the market was being manipulated here, and then this is where distribution take place. This is where manipulation took place, and this is where distribution took place. This is 4 hour time frame, but it occurs even in 15 minutes time frame, 5 minutes time frame, even as approximately as 1 minute time frame. All these manipulation took place. Now, ICT, the ICT helps you to be able to trace the manipulating level of the market. For example, now, how do you know that the markets are actually going to come up to sweep this zone? Like if you watch my previous video yesterday, I marked out a particular zone where a market where manipulation is being indicated, telling you guys don't don't sell yet because the market is about to be manipulated. Let me show you guys in case you were not in the class yesterday. This is still Euro USD. This sorry gold USD. I switched over to this 4 hour time frame, so I'm going to take it to 1 hour time frame. You are still going to go back to continue. Like this 1 hour time frame, I I observe that there is a manipulating sign in this market. Like if you go to my previous video, this candlestick here that was formed, I mark out the TP here. Watch it very well. I mark out the TP, telling you guys that it's going to come here to strike it. If you're a newcomer, I don't want you to believe me, but just go back and watch my yesterday video. You'll see exactly what I'm saying. So the market will come back. Like I set up a TP zone here, that is TP1, which it comes in to sweep out the TP. And now this is where the manipulation comes in. Now, have you seen the whole of this? The whole of this is a fair value gap. The whole of this is a fair value gap. Now, a fair value gap, let me explain briefly why this market will definitely clear out these stop losses. These stop losses. Like for example, this fair value gap is like, for example, a person who is reading, for example, you're reading a novel, you're reading a storybook, and while reading this storybook, you will be given, or let me say it, or your parents or anyone just call you for a very urgent meeting. What you now do, where the chapter or the verse of the storybook you stop, you definitely put a mark at that point. Say, oh, this is the page at page 53, and you put a mark there, telling yourself that the moment you come back from wherever you are going to, you are coming to big start exactly where you stopped. That is exactly as what fair value gap means. So now this fair value gap that the markets created, they're actually telling you that this is where they stop, and they're actually coming back to begin exactly where they stop. So they have to come in to sweep this fair value gap. And the moment they are coming to sweep this fair value gap, every other stop loss or every other buy stops order that we're incurring in this place will be swept, will move into the market as a liquidity sweep. So this is how it goes. And believe me, guys, I can tell you from next week, we are going bullish. I know you guys, as most of you guys might be seeing a bearish market, most especially the smart money concept traders, you might be seeing a bearish market. But for an ICT trader, you'll find out that this is a bullish market. You know, when trading, most traders they see they see trading, or they see signals in different angles. But from next week, this is going to be bullish. But I don't still want you guys to believe me. Let's just watch it till how next week unfold. All right, so this is where I'm expecting the market to come into play out. Why? Because there's gonna be a manipulation. The market's about to be manipulated, so they are going to manipulate this market to clear it out. So this sign here gave me a confirmation that there is a sign of manipulation here, telling you don't step in. Just a kind of sign, don't step in yet. All right, so okay, so we'll go in. I think this class, this ICT class, we'll break it into two sections. One in this morning, one in this afternoon, or let me say this morning. Uh, Possibly this is in our side here. It is 12 o'clock. So we'll break it into two sections. Now, first I'll be analyzing a bigger time frame. So that now, but in the evening time, I'll be breaking it down in my smaller time frame. Please, I'll be dropping also a link. Sometimes I also hold some classes in Forex School. That is my second account, which I'm going to drop a link and you guys can also follow. Now, but as for today, we're just going to be working through 4 hours and 1 hour time frame. So let's go back to the 4 hour time frame again. Okay. I'll be dropping also a link sometimes. So we uh, so there's 4 hours time frame. This 4 hour time frame. So now you can see this is where we mark out the manipulating, where the market will be manipulated, and the reason why the market will be manipulated. So at this point, so we are expecting the market to go bullish at this point, but we just have to exercise patience and wait. So if you're a trader, exercise patience and go bullish, but you can still go bearish if your analysis is telling you to go bearish. So okay, so there is what we call in the ICT. That's what we call in the ICT. We have what we call the intermediary lobes. Like, let me give you for example here. Some people call it head and shoulders. Some people call it head and shoulders. Now, if you take a look at this. Hold on while I mark it out. We take a look at this. Yeah, this look like shoulder one, and this looks like the head, and this looks like the second shoulder, and this looks like the second shoulder. Okay. Now, what the market is going to do, because this is a kind of a system, or most traders normally use head and shoulder, meaning is going down. Head and shoulder is going down. Then if it is going bullish for that day, head and shoulder goes down. If it's going bearish for that day, then head and shoulder goes up. So now, but this is what the market is about to do. The market is about to sweep out everyone analysis here, the head and shoulder, so that they will gain their, definitely they will get the profits of the day. I have a lot of things I will explain, mostly on the 15 minutes and the 5 minutes time frame. That won't be done here now. It's going to be in the evening time. And for those that are not watching, if you are just watching, maybe you are just watching now in the evening time, and just move to the next part so that you will get full understanding, because that is where everything will, you have full understanding. As a trader, you won't even mind trading. You won't like to trade using 4 hour time frame, or your entry will not be at 4 hours time frame. ICT entry points, like that is what we call the sniper entry. ICT holds almost 80% efficiency of sniper entry in trading. So that is where everything will be unfold in the evening time. So if you are here, just do as much as possible to exercise patient or turn on the notification button so that whenever it comes live like this or in the evening time, you join me. Thank you so much. I think we'll just put it for a pause for today because we don't have enough discussion on the 4 hour and 1 hour time frame. Thank you so much. See you.